Sorry about that. We're going to go ahead and kick things off again. I started streaming, but I started streaming to the to the wrong stream key. Oh my gosh, can you believe it? I was streaming to the wrong stream key, and then it got streamed to a couple of the wrong spots. So anyways, I guess I always have to remember to update the stream key since I'm still kind of new to the whole streaming world. Anyways, we're going to take a look at some of the options portfolio here. I want to take a look at putting on a couple of positions for a live, shall we say, a choppy market and a possible pullback. The other day, as I mentioned earlier, if you're joining me again, I did take a few hits and losses with the choppy market just because we have typically a bullish portfolio. So there's a bit of some hits. As we get into this, remember, none of these are recommendations to buy, sell, or trade any stocks or options, just my personal opinion. All right, let's go in and just to show you, some of those swing positions are doing just fine with the exception of kind of stone, as a regret kind of, you could say, but we'll let it sit. There's only 23 days, so hopefully it'll be okay. Portfolio did take a little bit of a hit not too long ago, so I'm going to just try to wrap up a few things and then I'll take a pause break. I'm going back to the lake house for a little bit, and so I'll try and do a quick review, and I'm trying to, I won't have all my video equipment there, so I might just do some basic videos that are pre-filmed. Hey, good morning, Napoleon. So let's take a quick peek here. Obviously, some of the positions that are doing fine, I don't have to really check. If they're doing not so good, then I do have to kind of review them. So we'll go in. I just do this fairly quickly. Stone, I mean, it's, I put on a small little bit. It's kind of down. It's not doing well. So, I thought maybe with this pop right here, it could continue, and we'll let it sit, right? We'll got to let it sit. So somewhere around here is kind of the base. If it breaks below that, that'll be a bit of a problem, and that's when I would get out or just let it kind of expire. This is a defined risk spread, so there's not a ton of stuff that I could really do with it. Obviously I could add to it, but that's just adding risk. Microsoft also down, not a good spread right now, but it is an iron condor, so it is somewhat protected. And this is what we did as well with Tesla. I did Tesla with that good till cancel order. I did get filled on it actually, and I put on a new one just to keep another one going without a good till cancel order this time. But you can see it's just hanging out. It's up $6, nothing more. It's just kind of moving up, $6 move today, and it's just pushing. I'm just kind of waiting for it to kind of grind up. But if it pulls back, I'm okay with that too. So rather than doing a put vertical or something too bullish, this is kind of like in these choppy markets. These are nice little spreads that are not too aggressive, but still cautious, right? It's a little bit like, hey, the market's a little choppy. So right now, there's not a ton I would do to this portfolio or add. I mean, we're not doing that well, right? We're kind of going into this 480. We've been chopping around here for a little while. If it breaks to the upside, then we could start looking at some more stuff. Or if it pulls back pretty heavy, you could look at adding. Right now, I'm just kind of sit on my hands. I do want to put on a little bit of protection in case we start rolling over. That is a bit of the concern, is if we start rolling in this way. So here, I'm going to go in and just start adding. Like you can see, I have some SPY positions. Normally I just keep adding some verticals into this, and those are doing okay. Like if you just look at it, one of the earlier videos I've made, like SPY doing like one contract a day kind of thing, keeps the doctor away. So here, right here, you can see it's doing fine. I could keep adding to it, but I am also a little concerned with what if we get a nasty pullback. So what I could do is create some hedge positions a little bit, just out of just a little bit protection, and I'm going to rename this to hedge. So there, I'm going to put a hedge right there. I'm going to put it in that account, and I'll probably do like a 13-14 days, something around that range. I will go in. What are we going to do? We're going to do a tight back ratio, and it's just kind of trying to collect a little bit of credit if things go against me. So let's hide the current positions we have. And what you'll see here is as we'll go in, let's see if this is traded, not even traded maybe. Okay, why is it not doing it? Because I sold a back ratio. We're going to do a buy a back ratio. Okay, buy a back ratio. Okay, so now we'll spread this out a little bit more maybe, because again, there we go. So something around, let's see, I'm trying to get some kind of credit, right? So there's barely any credit. So I want to get a little bit of credit for a possible nasty pullback, or a pop to the upside. So if it drops in a big way, actually no, let's do it the other way. Let's do the call side. Sorry. We'll do it this way. Sell a, not a vertical. Well, we could do it with a vertical. You sell a vertical, we change it to custom, and then what we'll do is we'll sell, we'll buy two of those. Okay. And there we go. And now we'll spread these out a little bit. There we go. So now if the market pulls back, I'm receiving $57 credit. Okay. But if it pops, it's not too bad. If it pops a bit, yeah, I do lose some theta. But if it really pops, I'm okay. So that's how I'm trying to minimize the risk, but I'm also trying to budget some credit for the downside. And if it grinds up slowly, yeah, I'll lose some theta a bit, but I have some other positions that are bullish, right? The point is that I have a bigger bullish position, and I have quite a bit of bullishness. So this will kind of help ease off the pressure on that. So what I'll do is I'll probably double this up. So let's go to 4, and then you can go to kind of 2. There you go, there's 110. And then now you kind of wonder, how many do you really want? So I'll go hide simulations. We'll show the position. How many deltas do I have? I have about 35 deltas here. So if I want to cut this, and if it pulls back, you know, I want to cut it quite a bit, right? So maybe by half. So now I'll go to hide the position right here. So let's go to double it up again. So let's go to 8. And we'll go to 4 here, and then you'll slowly start kind of tweaking based on your personal needs. So now I've got negative 22 deltas. So it's not too bad. So I got negative 22 deltas if it pulls back. And this is shorter duration too. So remember, it works a little more accelerated. So that'll definitely pick up some speed. So I don't want to get too much to cut my deltas. Maybe I'll dial this back. You know, you can start playing with the contracts, kind of what you personally need. You could just start a light position first and then add to it later. So it's kind of a 4-3 spread. And the reason I'm doing it around 14 days is just to get that theta to kick in a little bit, because it's a shorter term play. And also I don't have any contracts here to confuse the heck out of me. So, you know, so you could kind of play with this based on your personal needs. And if you want to hedge off like some of the bullish positions you also have, then you'll need more and more and more deltas, right? So what you'll do in this case is you'll beta weight based on maybe the SPY, and then you can see I've got about 205 deltas in general here. So actually, you know, you need kind of a little bit more, right? So you have to play with that. So I'm going to go ahead and just kind of start off with, how many do I want? Because again, you got this theta that you got to look into, but it's not too bad. So I could hedge for about $240 here. And yes, it does require more capital here, about 2,000. But if it pulls back, you know, you could take off 100, 200 bucks. It's not a big deal, right? Because already I'm down 340 today, and yesterday I was down quite a bit more with a lot of the stocks pulling back. But it's just to get a position going, just for some time in the next 14 days. So I'm just trying to watch that curvature. So you're just starting it out, and I'm going to put in my hedge pile just to kind of get those things going, and see if I can get filled on that. There we go. So that's filled. I don't really want to add too many positions right now. That's kind of no point right now with the toppy market. There's just no need. Some people press it. That's fine if you're more aggressive. The other thing I want to do to hedge off some of the volatility risk, because I am probably more short vega on this. You can see I've got negative 52, negative 36, and negative 11. So I am short vega on most of these. So I want to offset some of the vega risk as well. I'm going to go ahead and do that with probably about a 30-day SPX. I'm going to go this time. I'm going to go with a little bit of a bearish calendar. I'm going to go with a little bit of a, because that's got some good positive vega. We'll do it this way. So that way, if that pulls back, I get some good vega. Longer duration gives me more vega. And I could even go a little bit here. That gives me about another, how many points on the break even? I'll let it go past break even as well. So 10, 20, 30, maybe 40 points. And it's only a risk of like, you know, 100 bucks. And then and then that vega is 62, right? So my point is that when I get back in here, it's not that I'm going to make it from theta. I'm really looking at the vega here to offset the vega hit problem that I have. So I got 62 vega, and I don't want to go like 60, 90 days because those options are not going to help as much. So probably somewhere around this 30 might help a little bit. That's where I'm going to go and put on one of these. I'll put it also in the hedge, just a small position there. And then what I'll do is another tiny calendar way over here, very tiny. But I'm going to go actually a longer duration. And the reason I'm going further out is just it's cheaper calendar, number one. Number two, it'll protect you even more when it does sell off. So I'll probably actually go about 43 days maybe. So that'll give me about a 100-point sell-off. It's a huge sell-off, but yeah, about 4,700. Let's just go right there. Nice even number. I just need it to pass through. I don't need it to expire there. I need it to pass through. And again, the vega, and now I'm playing with I got to play with the vega a little bit. So we'll go here. This is a little more expensive because it's longer duration. But, if it just kind of passes through, good vega, 76. Again, just hedge some risk just in case we tick up. Like, we're at 17. That's pretty low for this kind of environment. Put it also in the hedge pile. And we'll see if those get filled here soon. We're kind of looking just to hedge off some of that risk for the time being. There's one. And I can press this one a little bit. SPY is a little, you got to wiggle it a little bit till we get it filled. It's not as easy as SPX is a little more difficult than SPYs. There it is. There's the two. So there we go. So I got a couple of hedges in place. Not big, right? The hedges, remember, they're not there to break you even right away. It's just that way. If let's say you're losing $1,000, instead of losing 1,000, you might lose like 600. So it's just there to kind of cushion the blow, right? If you get a sucker punch or you get punched in the gut, rather than getting punched in the gut, if you have like a chest protector or something, it just cushions the blow, right? So that's what we're kind of trying to do here. And right there, so we got kind of our position going. We got SPX, a little bit of protection on two different spreads. So you could see, let's see, go to the expiration. There's kind of our two calendars. It's a little messy. And then I've got another hedge. Actually, go here. There's the other hedge right there. So that way, if it kind of goes up, you're not taking too bad of a hit if it goes against you, because you always want to think about what if it goes against you. So that's kind of all I'm looking to do today. I wouldn't overdo it, right? The market is still choppy. Like you could just see, it's just kind of chugging along. So some days are just like that. And this is the time maybe you'll put on maybe more iron condors or verticals, or you could look for like some day trades or something like that too. I personally don't do it too much because I just don't have the time. I got kids screaming upstairs and that kind of stuff that happen. But yeah, you could take a look at some stuff like, hey, if this one's moving well, you could start nibbling on a small little position like Nucor here's moving well. You can see pushing 122, 125 now. And if you like it, you could start little nibble positions. Shopify breaking down. Pinterest, I know, was breaking down the other day too. So let me see here. Alibaba starting to move a little bit. So yeah, little stuff like that, like specific things where you're just kind of like, okay, these don't look too bad, kind of thing. And those would be the ones you'd start nibbling on. But again, very lightly in this type of market, right? Because if the market's powering higher, that's when you would probably do a little more aggressive. But the market's choppy, so any selected stock you pick, you want to be more cautious about it because the market can pull it all down anyway. So Pinterest, again, like you can see, boom, boom, choppy, 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 and selling off like big time. Tons of volume right here, 22 million. Normally you're trading 8, and you had 22 on the sell-off. So right there, it's not looking good there. So yeah, you want to pay close attention and be a little more careful here because a lot of these things are just very, very cautiously positioning. Like take a look at Microsoft. If I would have wanted to own it at 340, not bad. And now like we've got some earnings coming up, you could maybe start nibbling on some of these specific stock picks. I mean, it's coming in through 318, maybe. And I've got one, but I did the spread here with a iron condor bullish one instead. So again, it's bullish but it's just very cautious. It's a different type of spread, right? So I could add to it or change it up a little. So if the delta is a bit high, I could tweak it, but or add to the position, something more along the lines of, and again, I got to be careful with earnings, but something like a back ratio that we did just the other way. Again, I don't really see anything exciting right now. ExxonMobil's pushing well, but it's already, you know, to me, it's a little extended. Pfizer, maybe you could buy the dip. I actually did a review on this one on the Critical Charts channel, if you want to check that out. The second channel, all about technical analysis. So yeah, so there's a few out there, but for me personally right now, from a portfolio standpoint, I probably wouldn't do too much, except maybe could take a nibble on Nucor. And then other than that, I mean, my scan is limited also, keep that in mind, because I don't have anything that doesn't trade weekly options on this list. There are some others that are doing okay, but they're not trading weeklies. And I might do BABA. So why would I choose Nucor over BABA? Maybe price action, or maybe just because BABA's been sold off quite a bit, or the earnings are also further out. So why don't we throw a shot on BABA? Again, you take your shot, but I'll start it slow with some protection. So we've got earnings 221. So let's try this. Okay, let's go right here by a back ratio. Where am I? Right here. And then we'll go with BABA, but I'm cautious, right? Because it's a choppy market at best. You're walking on thin ice. I'm like, why do I want to press it too much? Let's see, we've got this. Okay, so something 123, 110. Let's see here, 105, something like that maybe. And then we'll go, we have to do just a little bit more contracts like that. So that way, if we do get a nasty 10% pullback, I'm not hurt as bad, but still it gives me some exposure to the upside. So very simple. Could I do one? Let me see. Go 1 and 2. Yeah, I could just start out very simple. Why don't I just do that? Very cheap. It's just a swing trade, very small. We don't want to overdo it. So just build a position. If it keeps going tomorrow, you could add to it and that kind of thing. That's my approach. But you start nibbling. You could always do one contract a day. And with time, they build up. Like you look at SPY, you can build out positions. They just take a bit of time. Like people don't get it. You don't just get like 10 or 20 contracts all at once, unless you're doing a build out of 10, and you're getting into hundreds, right? So, but we're building out kind of slow. Because it's more cautious, and that's why this portfolio I do more on the retail side for regular average folks. You know, we're not doing a hedge fund here. We're just opening up your mind to thinking about how would I manage this as a portfolio? How would I take a little cheap shot at little areas, and how would I do it, you know, for different risk levels? Because everybody's at a different risk point. So it's just my thought process and my personal way of kind of approaching things. And again, on a day like today, again, it's choppy. It's not pushing anything yet. It may, if it starts picking up speed, then obviously you could start adding to it. But for the time being, everything's still a bit weak. If you're selling calls, you're selling them closer in. You know, there's some highlights, but they're small. So anyways, I'll let that work on Alibaba. It's already up kind of 5%. Some of these are doing okay. The other ones are not doing as well. So we'll keep an eye on this, and you know, as this starts pulling back, I might add more to the QQQ or that kind of thing. The rest of these are just kind of isolating here. So there's not a ton of things that I would do at this exact moment. You could see SPX here. The hedge is just doing okay. SPY, you know, again, just doing its thing. We're waiting for those trades to kick in. Disney's doing well. You know, just picking up some speed. You can always add to a stock that's doing well, and that's kind of a good thing to usually do, is add to the ones that are running well. And you can see it from the profit and loss. You can also see it from the percentages, and yeah, just let them do their work. Sometimes you got to let the trades do their work, and then you can add to them a little later. So yeah, Anyway, all right, thanks for joining me. Enjoy the rest of the day and week. I'm not sure if I'll be doing any live sessions later this week. Probably won't be. It'll probably just be recorded videos and uploads, just because I'll be on slower internet and at the lake house there. And then I'll get back to you guys maybe in about a week or so. So anyways, thanks for